SPY to 400 or just a bull trap before making new lows? Let's check it out. How's it going everyone, Mario here. In this video we will go over how far we can push to the upside before the next bear shows up. With CPI around the corner, the only thing which is certain is volatility. Are we near a short-term top here on SPY, or we're gonna push all the way to 400 to fill the gap this week? Without further ado, let's get started. We are looking at the daily chart of SPY. For the past 3 days, we are range bound between 385 and 390. Price tried to peak about 390 multiple times and got rejected. We can look at it two ways. Either we are gathering energy by consolidating below strong resistance levels to make a push to 397 or the round number at 400, or the buyers are not interested in buying anymore at 390 and the next reversal is in the cards. Leading into this week, we have CPI, the inflation data, and retail sales around the corner. Though we don't have certainty about the push to 400, one thing is certain: volatility. Since we're not certain, we're going to address both the bull case and the bear case and see which side has more probability of working out. First, let's go over the bull camp. If you are a bull, you need to keep an eye out for 390.64. If we push higher than this number, watch out for 394 and 397 to the upside. Above 397, we can easily push this to test a big fat round number at 400 for the upcoming week. There are few catalysts to keep an eye out for which might push us all the way to 400. We do have CPI on Wednesday. We will dive deeper into the analysis of CPI in the later part of this video. But for now, even though the overall trend is still bearish in a longer time frames, the shorter time frames are still showing some strength. That being said, if you haven't went long until now on SPY, there is no point in going long right now. Wait for SPY to pull back to the support zones, which we will talk about in the bear case section of this video. If SPY held those levels as support, then we can think about establishing a new long position over there for riding it all the way to 400. But for now, downtrend until it's not. Don't lose the focus on the primary downtrend even though we are having a secondary uptrend on the shorter time frames. So now let's go over the bear case. If we do pull back from where we are trading right now, where is the high probable chance for SPY to find support at? Now that's the question which we need to ask. If you are a bear, you need to keep an eye out for 387 and 385. If we do start closing candles below 385, we can easily run a test to the AV VWAP from the lows of June, which is currently sitting at $380. If we do go below 380, members of the Discord and members of the Patreon will get live updates on what to watch out for next in SPY. Don't forget to check it out, the link is down below in the description. Now, we know the numbers, let's speculate a bit. We have consumer price index data on Wednesday. Oil prices and energy prices dropped big time because of the fear of recession. That will have a big impact on the CPI reading, which is due on Wednesday. But there are two things which we need to keep an eye out for. One is the CPI, the other is the core CPI. The core CPI does not include the food and energy prices. As these idiots like to argue,
the Fed doesn't have control over food and energy prices, bro. If Fed doesn't have control over these two, why raise interest rates, bro?
Well, to these idiots, inflation does not come only from food and energy, it comes from the other sectors as well. This is the last month's CPI data. You can see two things: all the items, which is regular CPI, and all the items less than food and energy, which is the core CPI. The core CPI consists of commodities, new vehicles, used cars, and stuffs which you see out here. In this CPI, though the energy prices might come lower, we gotta make sure the sectors in the core side of CPI come down as well. For now, the trend is, if one sector underperforms this CPI reading, the same sector outperforms the next month. 1 step forward and 2 steps back kind of thing. The medium forecast for this month is 1.1% for the regular CPI and the core CPI forecast is 0.5%. If we do get a lower than expected inflation reading, market will come to a conclusion for a short term that the inflation has already been peaked. So this will in turn cause a massive short squeeze in SPY and QQQ. As everything is pushing higher, the bullshit analysts like Tom Lee will come out of the woodsheds and start calling some bullshit price targets like SPY to 500 by end of 2022 bro, and shit like that will happen, only to get a pie in the face when the next CPI reading shows up way hotter than expected again, and these analysts will be going back to the hibernation. Again. I don't want to get into the inflation is peaked already argument because the situation is depressing as it is. The jobs data which we got on Friday says that the job market is still strong, but labor force participation is still low. It's very tricky to understand the fundamentals and analyze it and correlate it with the price. Sometimes, the price doesn't catch up to the fundamentals for a long time. So if you are a trader, keep an eye out on the price action. At the end of the day, price is the only thing that pays. Take high probability trades, manage the risk wisely, join the Discord, join the Patreon, link is down below in the description. I'll see you guys in the next one.